Let's talk about a situation that can absolutely turn tax season on its head. You're expecting a refund, but it gets snatched away to pay for a debt that isn't even yours. It happens more than you think.
So just imagine this for a second. You and your spouse, you file your taxes jointly, you've done everything right, and you are counting on that refund. You've got plans for it. Maybe a car repair, a bill that's coming due, you're checking your bank account, and you keep checking, but nothing. The money just isn't there.
And then the letter arrives. It turns out your entire refund has been taken. Just gone. Seized. And it's been used to pay off some old debt that belongs only to your spouse. We're talking student loans, maybe child support from a previous relationship. It feels so unfair, and honestly, for a lot of families, it's a huge financial blow.
So you're probably asking, wait a minute, how can they do that? How can the government just take my money without even a court order? Well, the answer is a pretty powerful law that basically lets them cut to the front of the line. It all comes down to Internal Revenue Code Section 6402. You can think of this law as giving the U.S. Treasury super creditor status, Unlike a normal creditor who has to take you to court to get a judgment, the government can just administratively intercept your money. It's called an offset, and they can do it to pay off certain debts.
And believe me, there is a pecking order for who gets your money first. A good way to think about it is like a debt waterfall. At the very top, the IRS pays itself back for any old federal taxes. Whatever's left flows down to past due child support. Then it goes to other federal debts, like student loans, then state taxes, and finally unemployment debts. Your refund can get completely eaten up as it goes down this waterfall.
Now here's a super important detail that confuses a lot of people. It's this split between two different government agencies. See, the IRS is the one that does all the math and figures out, yep, you're owed a refund. But then, their job is kind of done. They pass the payment info over to a totally different group, the Bureau of the Fiscal Service, or BFS. The BFS is the one running the show. They manage the big database of everyone who owes money, and they're the ones who actually grab your refund before it gets to you.
Okay, so you know why the money was taken. The big question is, what can you do about it? And this is where we have to get really clear on the terminology, because this is the single biggest point of confusion. You have to know if you're an injured spouse or an innocent spouse. They sound alike, but trust me, they are for completely different problems.
I think this quote from our source material just nails it. It's the difference between allocation of an asset and absolution from a liability. So ask yourself, are you trying to get your share of an asset, the refund, back? Or are you trying to get out of being responsible for a liability, a tax debt, that you had nothing to do with? Let's just put these side by side. Injured spouse relief. That's Form 8379, is what you use when your tax return is totally accurate. The problem isn't the return, it's that your perfectly good refund got hijacked to pay your spouse's separate debt, like an old student loan. Your goal here is just refund recovery. Now, innocent spouse relief is different. That's for when the tax return itself is wrong because your spouse, say, hid income or claimed fake deductions. Your goal there is to get relief from a tax debt you didn't create. So for the rest of this explainer, we're going to focus on that first scenario. Your tax return was correct, but your refund was unfairly taken. So let's look at the tool you need to get your money back.
So, just to be crystal clear, when the IRS talks about an injured spouse, they mean a very specific thing. You filed a joint return, and your share of the refund got used to pay a past due debt that belongs only to your partner, a debt you have no legal responsibility for.
To qualify, you got to be able to check these 4 boxes. 1, you filed a joint return. 2, and this is crucial, you are not legally on the hook for that debt. 3, and this is how they figure out your share, you personally had to have made tax payments, like through withholding from your paycheck, or claimed a refundable credit. And 4, obviously, you're doing all this because you want your piece of the pie back.
So how does this form actually work? Well, it's basically a preemptive move. Filing Form 8379 is like telling the IRS, hey, before you send that refund check out the door, I need you to do some math. It makes them split the joint refund into 2 separate pots of money, your pot and your spouse's pot. That way, only the pot belonging to your spouse can get seized. Yours is protected.
But, of course, it can't be that simple, right? Just when you think you've got it, there's a major curveball. If you happen to live in what's called a community property state, the rules for splitting up that refund get way more complicated.
If you live in one of these 9 states you see here, you really need to pay attention. We're talking Arizona, California, Idaho, and the others on this list. In these states, state law can completely change the math on who owns what. And the magic number here is 50%.
The basic idea in these states is that pretty much all income earned during the marriage is considered to be owned 50-50 by both spouses. It doesn't matter whose paycheck it came from.
And this creates a huge trap. Check out this example from our source. Let's say a spouse in California earns all the money, $100 grand, while their partner earns $0. You think the whole refund is theirs, right? Wrong. Under community property rules, their partner is legally considered to have earned half of that, $50,000. And that means half of the refund is now vulnerable to that partner's debts. It's a really brutal twist.
So waiting for your refund to disappear and then fighting to get it back, that can take months. It's a huge pain. But the good news is you don't have to wait to be a victim. You can actually get ahead of this and stop the seizure before it ever happens.
Here's the pro move. If you know your spouse has a debt that could get your refund offset, don't wait. You file Form 8379 right along with your annual tax return. You can even write injured spouse right at the top of your Form 1040. What this does is it signals the IRS to do that two-pots calculation from the very start. That way, your share of the money never even gets in the crosshairs of the Treasury Offset Program.
And this really brings us to the final, bigger point. This whole injured spouse issue isn't just about taxes. It's really about financial transparency. It's about the danger of what you might call zombie debts, these old obligations from a partner's past that you might not even know exist, until they suddenly spring back to life and take a bite out of your shared finances. It's just a powerful reminder that we all need to have those tough, open conversations about money, because what you don't know really can hurt you.